Okay, well, good afternoon, everybody. Thank you very much for giving up part of your Thursday afternoon to listen in to our session. This is the second in our series of what we're calling masterclasses in some of the sort of key professions and areas that are impacting the insurance industry at the moment. My name is Bryant. I'm a partner in Beale & Co.'s professional liability team. I'm joined today by my colleague Matthee, who's an associate in our team, and the two of us together specialise quite extensively in the defence of insurance brokers against civil claims and regulatory matters. We're also really pleased to be joined this afternoon by MacLaren, and Matt is a director at Griffiths and Armour, and his specialism is in placing brokers' E&O risks. And so the idea behind this session, when we first conceived it, was really to use our own insights as solicitors routinely defending the broking profession against claims, and to sit those alongside Matt's own insights as an expert sort of on the ground, as it were, to try and survey the landscape for insurance brokers in the current climate, and to flag areas where we feel claims are most likely to arise over the coming months and years as we sort of start to emerge into this brave new world that we are inhabiting. And that brave new world is bringing all manner of challenges, as I am sure you no doubt appreciate. COVID has created a very bizarre set of working arrangements for us all. I'm sat here at home at the moment in the process of self-isolation on the basis that my 11-year-old has just tested positive for COVID this morning, which is a joy. And, you know, I think all of us have spent the vast majority of the last 18 months, coming up 2 years, sitting in various places in our homes trying to get on with our jobs. And for an insurance market that's based very heavily around face-to-face personal contact, that has been incredibly difficult. And then you sit that alongside, obviously, the Lloyd's review of a couple of years ago now, which created the wonderful hard market conditions that we're now experiencing, which is pretty much the first time in a generation, I think, that has occurred. That has meant that the cost of insurance for many, if not most, companies, consumers wanting insurance is now at levels that they certainly have probably never experienced before. Underwriting appetite is decreasing all of the time on the back of the Lloyd's review. And then obviously you couple all of that again with clients who are struggling to emerge from COVID, and it's a bit of a recipe for strained relationships between brokers and their clients. And I know from having spoken to many brokers over the past sort of 12-18 months that it really isn't very pleasant out there, and every day brings with it the challenge of having to manage the expectations of disappointed clients whose insurance is really going through the roof. So just as I guess an introduction, when we first discussed this concept of a masterclass, the idea was to try and generate discussion between us all, not to be a sort of formal presentation as such. But we do now have 60, 70, 80 people on the line, which is great, and thank you again for giving up your time. And as a result of that many numbers, I think a proper sort of discursive session is going to be rather tricky. So whilst Matt and Will and myself will try to maintain a sort of discursive environment if we can throughout the next sort of hour or so, we would very much love to get you involved, and you should find somewhere on your screen there is a questions section, and if you've got any comments, observations, queries, questions that you'd like to sort of raise at any point during the session, then please by all means use that function. We'll keep an eye on it, and anything that we can get to during the session we will really try to, and obviously anything that we don't manage to get through to during the session we'll try and follow up separately, so please do make use of that if you can. So we're going to start today's session by sort of getting the dreaded C word out of the way. We've all, as I said before, been affected pretty deeply, some more than others. It's now pretty obvious where many of COVID's effects are being felt or are likely to be most keenly felt going forward. But obviously when looking at an insurance broker's lot in life, it's hard to escape dealing with COVID in some form or another. So we thought we'd kick off and get it out of the way. And I think, Will, you were going to start with some observations in relation to the remote working side of things.
Yes, thank you, Joe. Yeah, my name is Will Matthee. So transacting face-to-face dominated the way brokers operated. That was until COVID. And there was a survey conducted which suggests that 95% of insurance brokers expressed a desire for increased flexibility to work from home post-COVID. So it's very much clear that remote working is here to stay, with the benefits too appealing. But with that comes inevitable risks. So in terms of what we've sort of seen dealing with claims against brokers, but professions generally, it's with the remote working and communication over electronic platforms to remain the norm, we will almost certainly continue to see a significant increase in data breaches and cyber attacks. Scams and cyber attacks are also becoming more sophisticated and convincing, with the recent study finding that there's been a 600% increase in phishing emails since February this year. Connected to that, and quite astonishingly, the results of another survey suggest that about 38% of employees had not received any communication from their employer on these risks. I'm ashamed to say that lawyers are at the top of that list, with a figure of about 50%. So if you take, well, hopefully you'll take a few things away from today, but one is probably do as we say and not don't do as we do. So needless to say, data and IT security breaches can lead to significant financial and reputational damage. Remote working has also resulted in established procedures being rewritten, best practices rethought, and policies and capacity being stretched to breaking point. And the scale and speed of this change have been unprecedented, with some organizations still lagging behind. So in terms of just a sort of a risk management point of view, with these threats evolving and becoming more sophisticated, it's now more imperative than ever that business continuity, cyber and incident response plans, including the adequacy of cyber insurance programs, are regularly reviewed to ensure that they are kept up to date and in line with industry best practice. Just a second point, and something that Joe and I often sort of encounter with claims involving brokers, is the importance now more than ever for proper records and attendance notes to be prepared and kept. Without such a record, it's very, very difficult to rebut the client's version and defend the claim. And with what is now a sort of a hardened market, with the insurance landscape changing and all the sort of additional risk being posed by working remotely, we expect to see an increase in disputes, complaints, and claims generally. So again, more important than ever to keep sort of proper records. Remote working has also increased the time it takes to complete certain tasks. For example, it now may take longer for the broker, client, and underwriter in terms of receiving, collating, providing, and assessing information. So as I sort of alluded to, the economic working and insurance landscape is now such that brokers need to invest more time to get a greater understanding of their clients' individualized needs in light of shifting behaviors, preferences, and risks. And that's obviously to sort of comply with one of their core duties to ensure that a policy is placed which meets the needs of the client. Therefore, no surprise, I suppose, that a poll revealed that about 22% of brokers find that their biggest challenge is the need to act and react faster. So it will probably come as no surprise if I say that we expect to see an increase in claims relating to brokers failing to act with reasonable or the required speed. In terms of sort of risk management, the way we see it, is brokers will probably need to be more disciplined with their time. They will need to allow more time to properly discharge their obligations. They will need to be more disciplined in terms of keeping to a diary system. They will need to allow more time for the renewal process or carry out their duties generally, and where necessary, they may need to seek short extensions of cover to allow the renewal process to complete. Just a final point in terms of sort of a risk theme emerging from COVID and working from home is the essentially inadequate supervision. It's adversely affected the ability of team members to learn and develop through essentially a process of osmosis. It was much easier and simpler to approach a colleague in the physical office with a question, share knowledge, and to absorb good working habits through seeing other more experienced professionals in action. And for the reasons I already mentioned, supervision is now more important than ever because of the sort of unprecedented times we are in, and the added complexities and almost sort of more onerous duties or tasks that will need to be performed by brokers. We are already seeing an increase in claims and client complaints, both in relation to brokers and other professions, connected to the failures of more senior staff to properly oversee and supervise work. More junior staff not necessarily appreciating the significance of certain issues which they were given the responsibility to handle, and then sort of matters arising from inadequate staff support generally. Another sort of issue that's sort of closely connected is obviously not sort of seen as a classical or core risk of a broker, but remote working is definitely brought into sharp focus the well-being of staff. With some form of agile working likely to remain the norm, there's little doubt that the stress suffered by staff has increased as a result of isolation caused by home working and more limited colleague and supervisor interaction. We do think it should be a worry for organizations. You are only as good as your staff, and tired, fed up, or unmotivated employees are liable to make careless errors, whether that's in the quality of their work generally, a missed deadline, or a poor decision that jeopardizes the security of sensitive information.
Will, just on that point, on the kind of mental health, because I kind of jotted down a few notes earlier today just to kind of link the two the key factors that you've mentioned. One is supervision, but the second one is obviously the kind of mental well-being of staff members and the resource pressures that they're under as well. So, I mean, I've certainly, through some of the brokers that we look after, in normal times where actually we've received notifications from our broker clients where a staff member has simply had some sort of real mental challenge or a nervous breakdown, but actually it's been quite difficult to spot and identify those things, and that's in a kind of office environment. So I've not seen any examples yet where people working from home have kind of just gone AWOL, but I would say that is certainly combined with the lack of supervision, because people can put a brave face on in the office. So actually it's much easier for them to kind of hide away in those issues. So have you guys got any examples of kind of notifications where that's actually been the root cause of it?
I've certainly seen a few issues where that has happened, and I certainly think that in the new hybrid world, where you're going to have some people working from home and some in the office, I think that's going to be even harder still to spot these issues, because I think we can all have systems and processes for when we're in the office. We can put in place procedures to have pastoral care for people when they're in the office. We can put in place pastoral systems for when people are all at home and have a rota for who contacts who and when. But But in a hybrid world where some people are in, some people are out, you don't necessarily always know who's in on what days. I think that's going to create a really difficult dynamic in terms of spotting issues. And I take your point completely, Matt, that it's hard enough to spot them at the best of times. And you know, as I said, I think we are starting to see a few notifications coming through which seem to have mental health issues at the heart of them, because they are silly mistakes that you think, you know, ought probably to have been eradicated. You know, missed renewal dates, you know, the silly things. And I think it's the silly things that will make a reappearance in times of mental health issues. And so I certainly think that we will see a rise in those sort of attritional claims coming through on the back of COVID for sure, and how firms across the board, but brokers in this context, adapt to that hybrid working world, I think will determine the extent to which those problems stay just as problems or turn into claims.
Yeah, and another point that I would make actually is that when you do tend to get kind of notifications related to the work carried out by a person that's been suffering as well, they actually tend to be claims that actually lead to damages being paid out, because ultimately they quite fundamentally are people that just don't do the job, so they don't action client instructions. And you mentioned about renewal dates, things aren't renewed, instructions, cover's not bound. So actually, when you get these notifications in, it tends to be a case where you think, crikey, we're going to end up having to pay out on this, because ultimately there's an uninsured loss, and actually it's not about the kind of the note taking that Will was talking about before. It's about fundamental breaches and failure to kind of execute kind of instructions and do the job.
Just to sort of add to that, because obviously even if you sort of know the problem is, well, that I suppose that's one step forward, but the next is how do you sort of combat or mitigate the risk? And Joe and I do getting sort of part of our service offering is to do extensive reviews and audits of law firms' systems and processes and policies for the benefit of PI insurers, so that they could hopefully get terms or cover on the best possible terms. And I don't know how practical it is for brokers, but what we've seen to sort of address this very risk that you sort of highlighted, Matt, is the introduction of a centralized diary system. So if someone is off, and someone else can pick it up, but also connected it to that as sort of a buddy system. So if someone sort of goes off, then there's someone else that could sort of step in. It's not going to sort of nothing be done for 2 weeks. I just don't know how practical it is for brokers to sort of adopt those sort of processes or procedures.
Yeah, I think that's right. I mean, I think it's one of the bizarre things that COVID has done is that it's rendered those firms who are very heavily paper-based at risk, and then the resulting cyber threat has actually put those firms that are very tech-based at risk. So it's sort of almost the perfect storm in a way, because if you rely on one, you're at risk. If you rely on the other, you seem to be not mitigating your risk particularly. So I think you're right. You know, paper-based diaries obviously is a classic where if firms that adopted that kind of a regime pre-COVID, it may have worked beautifully when everyone was in the office, but as soon as we're all at home, that kind of thing really obviously needs to be sorted out straight away. So, you know, I think most firms have now managed. They have now got themselves over the line, and I know most of the people in the audience will be at much larger brokers who just don't face that issue at all. But obviously, in terms of the broking profession as a whole, I think an awful lot of adaptation has had to be done. And for the most part, I think most have got over it. I think it is this new hybrid working arrangement that is going to cause quite a lot of additional problems, some of which we just can't foresee at the moment. But I think we'll have to see. But I think we probably ought to move on because we've got a lot to get through. And the other thing I was wanting to just touch on just before we sort of hit the hard market environment fully is just the business interruption side of things, because I think no talk on insurance brokers risks and liabilities would be complete at the moment without some talk about the BI situation. Obviously, the FCA test case provided a level of clarification from a legal perspective as to which BI policies might respond to COVID-related business losses. But whilst the academic debate was all sort of very interesting, the practical application of that judgment has proved to be anything but straightforward. And a lot of you in the audience may well be wrestling with this kind of issue for your clients at the moment. Insurers are still dealing with coverage on a case-by-case basis, it seems. Delays are serving only to increase the general sort of frustration and temperature of the whole debate. And obviously, wherever the ultimate decision from the insurers is that there's not going to be cover, or the cover will be reduced or restricted, then obviously brokers are going to be finding themselves in the crosshairs. And equally, clients who didn't have BI may well be starting to complain to their brokers as to why, or if their policy wording was one of those that didn't respond as a result of the Supreme Court judgment, or where their BI cover didn't have any of those little non-damage extensions that is obviously the subject matter of the SCA litigation. Again, it's easy to see how a complaint to the broker may well follow. And we are now seeing quite a significant number of precautionary, largely, notifications coming in, arising out of this, where clients are starting to moan to their brokers about why it is that their cover is not responding, or why they didn't have cover in the first place. And certainly for our part, I know, Will, you've got some examples of this, BI-related claims against brokers, I think are going to be hard to get off the ground.
I agree, Joe. As Joe mentioned, we've already seen sort of the business interruption type claims being made against brokers. It seems that sort of advice being given to some insureds are that brokers are essentially going to sort of step in as insurers of last resort. So we've definitely seen sort of claims in that sort of context, but just in a term sort of breach of duty context, the claims that we've dealt with, we've sort of done proper analysis in terms of what need to be established in order for a claimant to get home on a breach of duty issue. And as we see it, that in most cases, the claimant client will face almost insurmountable obstacles. And for example, they will have to sort of establish or prove that, or the broker ought to have foreseen the possibility of a rapidly and widespreading, unprecedented, novel global pandemic such as COVID, that was foreseeable. It's amazing how many of these sort of allegations that we see that where the allegation is that was foreseeable, and we've successfully defended quite a few on those simply on the basis of advice given by Public Health England at the time. So by 22 January 2020, so when knowledge of there's been sort of widespread knowledge of COVID, or the presence of COVID, at least in parts of Asia, UK, England, or Public Health England certainly didn't consider as a significant risk as late as January 2020. So the simple argument is, well, if the health authorities couldn't appreciate the risk at that time, our client, broker client, could certainly not have. They will need to establish that the broker, having foreseen the possibility of a global pandemic, that the devastating financial impact it would have on businesses in the UK should have been foreseen, and or would needed to have foreseen a government response that would essentially close down the entire economy. And then arguably, the broker then ought to have been able to correctly predict and identify both the specific nature of the disease or pandemic, and then secondly, also ought to have been able to correctly match that correctly identified disease or pandemic with one of the relatively very limited amount of business interruption policies which the Supreme Court went on to interpret favorably in respect of businesses, in which was obviously a very, very complex case with the benefit of hindsight, and involving multi-party litigation. A further issue that will need to be proven is that the policy was available to the client in question, which may not have been the case given its size or other sort of features. And then lastly, that it was within the scope of the duty of, say, a general retail insurance broker to advise and ensure that, say, a small business of the nature of the client and with its turnover required protection from a novel and unprecedented global pandemic. So it's very, very clear there's a number of very, very difficult and high hurdles to overcome in order to succeed with a sort of a typical business interruption claim against brokers.
Yeah,
and,
I think that's got to be right, isn't it?
Yeah, these claims tend to be sort of vigorously pursued at the start, and I think it's sort of a case of people sort of getting on the bandwagon and not necessarily appreciating the complexities in terms of sort of just getting over the first major hurdle, which is breach of duty. But then once they sort of you sort of send a robust letter of response and sort of highlight the difficulties that they face, then fortunately most of these tend to go quiet.
I agree.
I think in our experience is exactly the same as yours, really, and you might well be defending some of the notifications that we've seen, but as you said, I mean, right from the start, I think between us, none of us, and certainly my work with Beale at the time, no one ever felt that brokers were particularly vulnerable, but it's kind of almost a case of us having to go through the motions and see what actually happened. And there still are some claims management companies out there that are sniffing around, but ultimately, I think from a PI insurer's perspective, despite the fact that actually the majority of these claims are going to be fully defendable, the issue is that actually you've still got hundreds of thousands of customers out there that have BI policies that have not paid out for one reason or another, and actually it's the potential for nuisance value claims in large numbers, which is just going to be, I mean, it's not happened yet, fortunately, but if it does at any point, then actually that's going to cause a real major issue in trying to manage these either individually or more likely as a collective. So I think that nervousness out there in the PI market is still exists, and certainly whether it's in the PI market itself or the reinsurance market, it's just an exposure that people would rather not have to deal with them ultimately.
Yeah, I agree with that, Matt. I think that's exactly it. I think the lasting legacy of the BI scandal, as it is just going to be the defence cost that you're going to have to spend in getting rid of what are essentially largely bad claims, and whether a market response would be appropriate. I mean, I've talked to a few people in the past about whether or not there might be some appetite to bring the market together and sort of try and run a few of these as test cases so that we can just try and nip it in the bud, because as soon as somebody starts paying out, even on a nuisance basis, all it does is encourage more to come through. And obviously, if anybody's got any comments on that, or if that's something that somebody might feel is worth taking forward, then we'd be delighted to have a chat about that separately. But so yeah, there we go. I mean, I think that's COVID in a sort of probably slightly larger than we thought nutshell. But in terms of the hard market now, you know, Matt, this is perhaps sort of over to you. You know, away from COVID specific issues that we've just touched on, where do you see the major issues facing insurance brokers in the current market to be, sort of based on your own experiences within G&A?
Yeah, well, I guess I mean it certainly is a hard market, and it's not easy out there for everybody. But I guess I think there's a few bullets on the slide just to kind of flow through. So I mean, I guess the first one is experience. I mean, there's a lot of people in this industry that won't have ever faced a hard market. As you mentioned, it's nearly 20 years ago that we last saw the last hard market. So actually, it's similar to coronavirus, it's a novel event for many people that we work with and speak to on a daily basis. So from that perspective, it's quite tricky. Even the kind of the old figures in the industry, the last hard market was 20 years ago, and actually a lot of those skills and a lot of the knowledge will have been kind of lost. So from that perspective, it's quite difficult to motivate and to try and direct our fellow employees and the staff that work for us to kind of operate in the right manner. It's something that we have to think about when we've got resource pressures due to COVID, working from home. It certainly proves to be quite a challenge, but I think the main thing is that through the 15 or more years of the kind of soft or softening market, actually what you tend to find is a lot of brokers out there, and certainly won't rule myself out, you kind of lose some of the critical skills that are quite important to deal with a hard market environment. And there's various things that you'll include in that. One is client management, client expectations, but also it's some of the technical skills that the broking process between broker and insurer in a soft market becomes a little bit too easy. So actually it becomes a little bit easier year on year. So actually when you face the sudden kind of cliff edge or the mountain in front of you, a hard market, if you've not been used to those skills and getting the detailed knowledge to put a quality submission in front of an insurer, then actually you're on the back foot. So you're starting at -1 or -2. So actually the lack of that skill and insight means that you're not going to be able to give your customers the better outcomes that they've been used to, because in a hard market you have an increase in premium rates but also a narrowing of cover. So it's difficult for brokers to try and find where they're going to offer value in that process. So you're not offering value by reducing the premiums, because that's not going to happen. You're not offering value in demonstrating your expertise to them because you've lost those skills, but also you're not delivering value by giving them the products and the insurance cover that they actually need and that they're used to, because the insurers are clipping the wings of all the policies that are out there. So you've got quite a number of things there, a number of challenges. And for a new person in the industry, I mean, we've taken on probably around about 30 new employees over the course of the last 18 months. And their first experience of the insurance market is in really difficult renewals. So actually, it's going to be a really good grounding for them as they kind of go off in their careers, but it's not an easy environment. And it's not easy for people who've worked in the industry for 10 years or 20 years either. So I guess moving on slightly is actually when the market's hardening, it makes those client conversations and the meetings and also those with insurers that little bit more difficult, and it pushes the conversation towards premium and price. There's always going to be a danger with that, because actually if you spend half an hour out of a meeting talking about premium and 30 minutes talking about coverage and information gathering, then actually that sounds completely lopsided, where you should be spending 55 minutes talking about what the client does, updates, things that are important to them, coverage issues. But if you're spending far too little time on that, then actually you're going to be missing the boat on some of the critical points. So actually in 6 months' time, or maybe it might be 2 years' time, that actually you've not disclosed that client's kind of business properly to potentially a new underwriter, then actually you're in a pretty vulnerable position if subsequently a claim is turned down by an insurer for that reason. So I think that's quite an important one. I mean, Will was talking before about generally the time it takes to kind of get renewals over the line, to deal with clients, continually talking about premiums and trying to cut further deals or go back to insurers and try and press them down on price. So actually we've got less time to do the nuts and bolts of the job as well, because there's only so many hours in a given day. So again, this is just another facet where things are going to be missed. More things are going to be missed in the current market than they were 3 years ago when the market was soft, because we had more time. We weren't juggling the work from home, working in the office balance. We're actually, I think throughout the whole of lockdown, I certainly from my experience, it kind of got maybe 3 months in, I'd not seen a client face to face for that entire time, but it was still working significant hours every day. Whereas in normal times, I'd spend 2 days out of the office, traveling down to London, to Leeds, to Newcastle, whatever. But actually, I kind of sat there and thought, when we are in normal times, how is anyone going to find the time to be able to do the job and do the commuting and do the client meetings and the social side? So it kind of, as we do enter this new kind of hybrid working, how is everybody going to manage the additional burdens on the job with the old ways of doing things. So I think that's going to be something that's interesting, that I don't think there's going to be a sudden jump to everybody acting normally and going back to 2 years ago, because I don't think the resource is there in the industry for brokers generally to be able to cope. So that's certainly an interesting one. And again, go back to what Will was talking before about the jobs that people are doing in isolation in the hard market. Bad practices can easily slip in, where you say something that you might not say if you're surrounded by colleagues in the office, to get something over the line, to get a client to renew. And those things can be kind of things that might not be the most professional thing to say, but you're doing it just to get things done. Whereas you haven't got the social pressure or the pressure of the office environment. So there's a few things there really. Again, in a hard market, as I mentioned before, there's kind of like cover restrictions that are coming into force. I mean, certainly in the broker PI market, one of the big discussion points with the FCA and BIBA and in market generally has been about the introduction of COVID exclusions for many brokers out there. So that's quite a serious development. And actually, we were getting new inquiries from brokers in their dozens on a weekly basis, where the broker had actually renewed with their policy with their insurers 4 weeks previously, but actually they'd not been told that a new pandemic or COVID exclusion had been included. So that's quite a fundamentally important coverage point that they've actually not been told about. So I think that's a pretty big failing, but we're seeing the same things in relation to, certainly in the PI market, it'd be the same in the D&O and the crime market, and certainly in cyber as well, where there's new exclusions that are appearing all the time in PI construction. There's fire safety notifications, and certainly now silent cyber, so cyber exclusions being applied across the board, discussion on silent cyber and all the things that go in with that. But actually, many brokers out there aren't actually discussing these things with their clients. It's going through with a policy document that they send after the renewal is concluded, and expecting their clients to read through the policy and identify these things, which I think you guys will share the same view, that if you just deliver a policy document that's 30 pages and say, go away and read it, client's not going to read it, it's not going to stand up in the court of law. So I think that is something that the industry in general needs to do a lot better. And the final point is that I want to make is just in relation to, with premiums increasing, there's obviously nervousness that clients might shop around and try and get a better deal. It's not always in their best interest to, but actually, if a broker is under competition or under attack from another, again, it moves that conversation point away from talking about service, talks about coverage and basically how they can deliver value, but actually the duty of care that they owe to that client is no different whether they're under attack compared to 3 years ago when they might just have a simple renewal. So actually, again, you get far less discussion about the important points, but the same duty of care applies. So it's a real kind of dangerous time. The other facet I would say is that the short-term approach of chopping and changing insurers may seem like the right thing to do, but actually if it comes with lesser cover, if it comes with less quality insurers that you're putting forward, might be an unrated market, might be this, might be that, might not be comparing apples with apples, then actually when things go wrong in 2 or 3 years time, then actually the broker's gonna, or the customer or their lawyers that they're appointing is going to point back to that time when you took that decision. And if your communication, your file is not right, then actually defenders generally find it quite difficult to defend these things.
Yeah, I completely agree with all that. I mean, there's a huge amount of stuff in there. And I think the experience point is a massive one, because as you rightly say, that there aren't that many people in the market, either on the underwriting or the broking side, who've seen a market like this before. And whereas on the insurer side, typically they are one step removed from the ultimate client. The broker is obviously client facing and has to deal with managing the expectations of their client throughout that process. And I think, as we all know, claims tend to come from very poor client management, and I think how you deal with an issue like this may well make all the difference between whether or not a claim ultimately comes in or whether it just sits as a grumble, which there must be an awful lot of grumbling, I suspect, going out there at the moment. And I think one of the key things is insurers that just say no. I think there's been a lot, certainly in the PI market, as I understand it, there's been a lot of withdrawal from different aspects of the market, and so broker penetration into markets is not what it used to be. And I don't know whether there are that many brokers out there now who can say that they've got entire market penetration. I would think that there's quite a few who could say that they've only got 1 or 2 markets, if that. And I think one of the key areas where I would think claims are going to come out in the future, bearing in mind that we're dealing here with junior people who've never seen a hard market before, who are doing all of this working from home, is just how transparent they've been with their clients about which markets they've approached, which markets might still be available if they were to go somewhere else. Nobody wants to send their client to another broker, but if you've not got the market penetration yourself, that's something that I think needs, you need to bite the bullet and do that. And that transparency then goes right the way through in terms of knowing the products that you're selling. You mentioned, I think, Matt, that the wordings that we're seeing, because in a soft market, broker wordings are all very common. As a result, brokers know their wordings, and now we're into insurer wordings, and they're much more restricted, a lot more subjectivities, and it is the broker's job to know the wordings that they're selling. And I remember very well, a couple of years ago, I did some risk management training at a national broking firm, and I said at one point, you need to know every bit of every policy you're selling. And the look of incredulation around the table, as I was saying, they need to know what they're saying, was quite stark. And that was during the soft market. I think now more than ever, we really need to know what it is that we're selling. And in a market where there's so many emerging new products, new services, the focus being much more now on prevention rather than cure. So, just to take an example of all the Vitality health insurance, where everything's linked to your Apple Watch, or the black box in your car that says how well you're driving, and all of that links into your premiums. The ability to compare like with like across a market when it's changing so fast, I think is one of those lost skills that you were talking about, Matt. And I think the inability to be able to do that properly in a lot of broking firms, because of the time and because of the lack of experience, because of the fact that people are working in silos rather than together as teams, I think is going to create that sort of perfect storm for attritional claims going forward. So I think that's, I think not a doom and gloom by any means, but I do think that the firms that look at that and invest in the training in their staff are obviously going to come out stronger, I think.
Yeah, I'd just like to caveat that Joe didn't come to Griffiths and Armour to deliver that risk management training, so it's not us that are looking with their blank, stony faces on.
I promise you, it wasn't Gina. No, but I dare say it would have been something that quite a few of the lower mid-market brokers might have experienced, because I think that it's not necessarily always something that is top of the priority list. And I know, again, a lot of the people in the audience will have people whose sole role is to look at the emerging products, evaluate them, summarize them, and disseminate that knowledge internally, which is obviously a great function to have, but not all brokers have got that luxury. So, that is something that I think, again, as I say, with people working in their silos, is going to be a hard problem to overcome.
Yeah, and in addition to that is the need with sort of a changing, client with I would imagine a lot of clients' risk profile would have changed the last sort of couple of years. The way they are doing things might have changed. And there's obviously then a greater need on brokers to sort of not only, ask questions, but ask the right questions. I'm sort of thinking about sort of solvency and liquidity in the hospitality sector, which has been hardly hit. You can no longer assume that what sort of applied last year is going to apply in the next renewal.
Yeah, I agree with that completely. I think there's a lot of things there, and one thing that we haven't touched on so much on that slide there is the cyber thing. I know you mentioned it, Matt, but in terms of cyber, clearly there's still huge uncertainty out there. And something else that I deal with is solicitors PI, and at the moment everybody's merrily writing and binding solicitors PI cover with no clue as to what cyber provisions are actually going to be in the minimum terms come the 1st of October. We've all got a vague idea of what it's going to look like, but there is still no certainty. And obviously the fear with cyber cover and how it meshes with PI is that in some cases you're going to have overlaps, which creates the potential for coverage disputes, and in some cases you're going to have gaps, which give the potential for E&Os. So again, the expertise that is needed to spot that, manage it, prevent it from becoming a problem isn't quite there across the board, I think, at the moment, because it's a new skill. Cyber is not something that's been around for forever, and it's a skill that is best learned in training and in teams and in an environment unlike the one that we're in at the moment and have been for the last 18 months. So I do think the quicker that we can all get ourselves back into the office and set up some sort of proper dedicated training for our juniors and sort of bridge that experience gap that I think is there at the moment and widening, the better for all of us. Which I guess takes us neatly on to I guess the final section of what we were trying to cover today, which is the sort of the crystal ball gazing as to where we might go into the future. And I've said already, I think that attritional claims are going to come out of COVID, not necessarily so much in the BI context, apart from the nuisance of the defence cost spend, which Matt was mentioning, I think, earlier on. But those silly little claims that I think are going to come through from paper systems no longer working, or the mental health affected simple mistakes. There just will be an uptick that we're expecting. And whilst there'll be high incidence, we suspect they'll probably be relatively low value. But as Matt again said right at the beginning, those sort of attritional claims do tend to result in payments. So there will be some payment needed, I suspect. The big area I'd identified, but again, I'd be really interested in your views, is more on the regulatory side. And where the regulatory side is going to go over the coming years. I think we're already seeing through the Insurance Distribution Directive and how that's sort of been played into the FCA regulation, a greater emphasis on day-to-day regulation. I saw a statistic the other day that 1 in 4 people employed within insurance brokers are dealing exclusively with the regulatory burden. So it's a pretty high burden already. And a lot of people are saying it's too high, particularly at the lower end of the broking profession. And I can understand that. And certainly from my experience of the SRA, we feel your pain. We have exactly the same regulatory burden that we all have to deal with. I just think it's going to become a little bit more focused over the next couple of years. And I think because of some of the problems that we're looking at today, the lack of perhaps transparency around what aspects of the market has been available to the broker, whether other potential markets are available, the potential conflict of interest if you've only got one market and you're putting everything into that one market, whether that is satisfying the FCA's sort of consumer outcomes, knowledge of the wordings that we were talking about, comparison with the rest of the market, all the subjectivities, gaps in cover, and also remuneration, what levels of remuneration the broker is taking and whether that is being properly and transparently communicated to the clients. I think the number of problems that we're probably going to see coming out of COVID is going to lead to a greater focus by the FCA on all of those areas. And I think it will also play out into appointed representatives, because again, those are a problem area, have been a problem area, I think, for some time. We've got a number of claims that we're dealing with at the minute that arise out of appointed representatives having gone a little bit rogue. So I think the FCA will pay a bit more attention going forward as to how AR relationships are entered into, what criteria the principal is using to bring ARs on board, whether it is a genuine relationship or one that is purely an attempt to make profit rather than sort of further the interest of the business and further the interest of the consumer, which obviously is ruling everything at the moment. And then what systems and processes are in place to make sure that the AR is doing what they're supposed to be doing and not stepping beyond their remit. So I think that is something that's going to be a greater focus of the FCA going forward. And then I guess similarly, and again, I'm really interested in any views that you may have, where the broker's role might be going in a market that might start soon to drift back towards soft market conditions. I'm sure we all hope that it might. We saw a major rise in broker-led MGAs back in the soft market days, and the FCA started to investigate this situation of potential conflict between brokers and their own MGAs. I think most brokers acted before the FCA could do too much to sort of enforce a sort of separation between the broker and the MGA, but they're still around. Obviously, there's a lower capacity availability at the moment, so we're not hearing quite so much about broker MGAs. But I suspect if market conditions improve and if we get a little bit more capacity coming into the market, that will become an issue again. So maybe the FCA will become interested in that again. I think the key one for me is the extent to which brokers are now moving away from pure traditional broking services and more into sort of consultancy work. There was a report done a little while ago by Deloitte, I think it was, literally in the last couple of months, that said that customers are seeking innovation in pretty much all that they do and all that they want, and what they see is a decreasing value in a middleman style service. They don't see value in that anymore, and in times where they're being asked to pay quite significant fees quite frequently for the broking service, and where they don't necessarily see all the work that goes on behind the scenes, they're seeking value for money, and as a result, and particularly where client retention is obviously a major factor, we are seeing brokers starting to provide services that are going beyond the traditional. I've seen instances of a broker providing an in-house risk management service for one of its biggest clients, which is obviously absolutely fine. But the more diverse the services become, the greater the risk of claims coming from a wider sort of variety of sources. And if the broking firm has a captive arrangement for its PI or a very, very high excess, that may not be a particular concern. But I guess that the risk management advice there would be to just make sure that the PI scope and the terms, the definition of professional business keeps pace with the additional services that are being offered. Because I can certainly foresee a situation where you've got an enthusiastic broker whose big clients they are desperate to retain, and they're promising all manner of services and add-ons to try and keep them in a market where price is not really able to cut the mustard. That's something where I can see real danger arising. As I always say, beware the enthusiastic broker. And then I guess finally is the sort of consumer protection agenda, which is driving everything at the moment. As I said at the beginning, we do a lot of claims against solicitors, and consumer protection is at the heart of absolutely everything that the SRA do, and as a result, the regulation of the profession as a whole, the minimum terms, it is all driven towards consumer protection. And the minimum terms that brokers have for their own PI at the moment are very, very loose. I think it's about £1 million of each and every cover as a minimum, with about 1.5 million on an aggregate basis, or 10% of income, whichever is the higher. It's done in euros, so it's not quite that amount, but it's there or thereabouts. But there's no other real minimum terms. There's just a requirement that there should be appropriate cover. And where consumer protectionism is driving every aspect of regulation, I can foresee at some point the FCA tightening those minimum terms up. And obviously, if they do that, then what is currently a dwindling market for brokers' PI may become smaller still. So those, I guess, are observations as to what next for brokers PI. I don't know, Matt or Will, whether you've got any further thoughts on any of all of that.
Yeah, just on the kind of the FCA regulatory position, obviously post Brexit, I mean, it'd be interesting to see what direction the FCA takes. But I think certainly the BI issue that the FCA has been clearly heavily involved in. It's been quite telling, actually, the kind of position that they've taken, and you've hit the nail on the head by mentioning numerous times consumer protection, because it's certainly proven that the FCA is going to do everything at its disposal to put itself front and center of that consumer protection landscape, rather than supporting an industry that faces its own challenges. And obviously, as a regulator, you can't really blame them for that. But I think certainly some of the language that was coming out as we followed the test case was quite telling. So my natural inclination is to think that the FCA will start to kind of bare its teeth, or just make things difficult for us as an industry, and that's both brokers and insurers. I think pricing and demonstration of value is going to be a big thing for them going forward. So yeah, I mean, the burden of regulation is, as you mentioned at the start, is pretty huge on both insurance brokers, but yourselves as lawyers. It's probably necessary in some respects, but it doesn't make it any less frustrating. And again, you keep going back to this resource issue. If we're spending all our time focusing on making sure our staff are kind of all healthy and are of sound mental well-being, we're spending more time on regulation, we're spending more time on the hard market conditions, then actually the ability for us to perform and excel in delivering great client service is being compromised by all of these things, because they all need time and they all do need addressing, because they're all important.
Yeah, I completely agree with all of that. I think that we're all finding that. I think that the burden that regulation places on all of us is becoming verging on intolerable, isn't it? And I think the difficulty with that is that we're finding that where once the courts used to set the standards and the regulators followed, we're now very much the other way around. And so any breach of the regulatory side really does expose us to the prospect of civil claims. So that enormous burden not only is hard to comply with, but the minute we fail to comply with it, we really do expose ourselves to civil claims. And I've seen loads of claims against all professionals, but in this context, I've seen claims against brokers where the particulars of claim reference regulatory principles, breaches of outcome 3 of the consumer outcomes agenda, failing to provide all relevant information. You know, that is a cause of action in a civil context now, which that's only happened in the last 5 or 6 years, but it's only going to carry on. So that huge burden that we all have is a sort of a blessing and a curse for anyone that does solicitor's PI. It's almost the equivalent of the mortgage lender's handbook, which is a horrible document that basically just pins liability on a conveyancer for everything that they do. I think it's not going away, and I think there's an awful lot of campaigning being done by BIBA to try and rationalise it, and there's an awful lot of campaigning going on the SRA side to try and get them to rationalise it, because it is a growing and increasingly intolerable burden. I don't know whether anybody has any sort of questions or observations or general sort of comments as to any of this, but certainly that, I think, is pretty much all that we had to say for the purposes of today, and where we feel that the broking profession is headed. If you do have any questions following up from the session, then by all means do pass them on. I know Chloe, I think, in our BD team has sent various invitations out, and you should have her details, but we will certainly be sending a copy of the slides through to all of those who've attended, so that should have contact details on it, and we'd be delighted to hear from you as to whether you feel this has struck a chord or whether there's anything that we've missed. But subject to that, thank you very much indeed for your time, and we will hopefully catch up with you in person in this brave new world, whenever it may happen. Thanks a lot. Cheers.
Thanks all.
Cheers, thank you.